Welcome to Chai Pe Kharcha, where we have conversations on personal finance among four NRI professionals working at tech firms. Think of these like water cooler chats you have at the office. Only this time, you will have Ishan, Madhvesh, Rohit, and Siddharth as colleagues you will be listening into. Before we get started, a quick disclaimer. We are not financial experts. The content provided in this podcast is for informational and educational purposes only. Always consult with a qualified financial professional if you need financial advice.
Awesome. Welcome everyone to another freshly brewed episode of Chai Pe Kharcha. We have Siddharth, Madhvesh, Ishan, and myself, Rohit, on the podcast today. A very interesting topic. I think pretty much everyone can relate to it. One of the biggest phenomena that is sweeping the world right now is artificial intelligence or AI. There is a lot of conversation happening around that topic. There is a lot of hype around that topic. And obviously, as we know, with most things, the reality is somewhere between the most optimistic and the most pessimistic scenario. What we are going to talk about today is how potentially AI might be shaping the world and what we can expect from AI in the next few years. And then, of course, we will also talk about potentially how AI can be used to improve our personal finance, our journey to financial independence, early retirement, all that good stuff. With that, Siddharth, you have recently started working in the AI space professionally. And I know that you have been using AI for the last, I guess, 1 year to work on different types of content formats, different type of social media and other use cases. So my first question to you, Siddharth, is at a very broad and a very macro level. What do you see happening in the world of AI right now? And how does that impact human society as a whole?
So, before I start with the answer, let me give you let me slightly correct you. So, a lot of people are very generically calling generative AI or using LLMs as AI. We've been working on AI for a long time now, even in the past roles, as you know, and what they're picturing is ChatGPT for the
Mhm.
most part and using that. To now answer your question on what do I see as the effect of AI on the macroeconomic climate, right?
Yes.
The I'll actually for that I'll use a line that said I saw in an interview of Satya Nadella, which that term that he used. So he said, in his experience, there has been no technology that has diffused so fast in the society. The AI, the diffusion rate is so quick compared to all the previous technologies, from cloud computing to even computing in general. Uh, pe- People are, the innovations are coming up fast and people are just not ready to pivot themselves to the new innovation. We can see that at least in the content creation space with the things OpenAI is doing. Sora is a good example. So there's the stuff that OpenAI does is the more popular one, but there is a lot of things happening in other companies also. So it's just very fast. In terms of the impact that will happen on the macroeconomic climate, I think the next 2 years will see a lot of redundancies, as in job cuts. And in the next 5 years, by the fifth year from now, a lot of roles that we don't know exist today will exist. That's how I am seeing it in terms of the job market. But yeah, in terms of its adoption, not just on a consumer level, but at a business level and at a government level, we'll see that happening very fast. So we know the example कि मोदी जी ने जो भाषिनी ऐप का यूज किया था काशी में, live translation into Tamil from Hindi. That's just the beginning into what. Okay, I've given a generic answer. Hopefully, as we dive into more questions, we can.
Madhvesh, maybe being closer to like the data space, can you tell us a little bit more about how large language models, and the reason I'm asking this question is because obviously a lot of the innovation that we see today feels like it's all coming from the West. We don't get to hear a lot in terms of AI innovation that is happening in India. And Siddharth just gave a great example of the Bhashini app that the PM used for one of his public addresses.
As Sid mentioned, right? Like even on the West, there are like 4 to 5 companies which are grabbing the limelight. And I'm sure like there are a lot more things going on. Like even leaving out the US, I'm sure that China and Russia are like even if not equal to US, even better. Just because there are not many companies, in terms of companies, there are not many innovations, but individually, we have known like countries like Russia and China doing really good, especially in terms of hacking and stuff. We have known like Russian hackers like really good overall in the world. Same way in India, as how the Indian businesses are structured. I see a lot of informally people working in AI. And this is also one of the key topics that even though the companies are based out of US, there are a lot of Indian minds actually developing some of these products. So on that end, I see Bangalore as probably in the top 5 cities currently in the world, which is developing a lot of these technologies. And one more bigger aspect here is that India itself is a really big market where you can develop a lot of things and be successful even without looking out for the world. So there are a lot of these companies which are budding out of Bangalore, trying to solve some of the day-to-day issues, challenges faced by Indian people. One big innovation that I've seen recently is like a AI-driven robot, which is helping to clean some of the severages without human involvement, which is a problem, really big problem, considered only to India, but application of AI can really remove the human intervention that happens there. So there are these pockets of innovations happening. And because it's not formalized, there are not much in the news. But I'm sure like 3 years down the line, there are going to be a lot more companies from the AI field coming out from.
One of the things I was reading recently in terms of VC funding, and it's interesting to see how the winds change very, very rapidly, and you can basically kind of taste it in terms of where the money is flowing, especially venture capital. Just a few years ago, I remember like anything and everything to do with crypto, Web3, like you just put that in your name or in your slide deck somewhere, and you're almost like surefire set to get the money. I think some of that is happening with AI today. Like it doesn't matter what you're doing as long as your company's name includes AI in some way, shape, or form, you're probably going to get whatever money you ask for. I was reading this very interesting article where they were saying that people who were working with Google's DeepMind, which was one of the pioneer companies in the development of AI before OpenAI became so popular, they have been exiting the company to get their own startups, and within couple of months of running their startup, they are getting $1 billion plus valuations, which according to some experts has been like one of the fastest valuation growth, call it a bubble or whatever, that's been going on in the West for sure.
To add to Rohit's point, Goldman Sachs actually expects investments to grow to 300 billion by 2025, which is basically the trend has doubled in probably a couple of years. Which again, if you can relate to Sid's point, AI has been disrupt. It's not only the disruption the AI is creating, the pace at which the disruption AI is creating is very, very fast in comparison to any other trends.
So, Madesh, you mentioned a very interesting point earlier, and I'll pop that over to Ishan. Ishan, I know you spent a lot of time in the banking space. You've been very close to the risk management space as well, right? And obviously, one of the things that we hear about from AI is obviously it's going to enable a lot of legitimate use cases, but at the same time, AI will AI is a tool just like any other tool. So if a good person uses it for good, it will amplify that. If a bad person uses it for doing bad things, it will amplify that. So in your experience and your foresight, how do you see AI reshaping the world of financial frauds, banking risks, and all of that crazy stuff that happens?
There's a lot that can potentially happen with the use of AI within the financial space, right? And there's a, a ton of use cases. I'll approach it more systematically from how technologies shape banking, and I'll point back to something that also said on how quickly AI is diffusing into society. See, whether I don't believe AI is going to necessarily replace human beings. I think it's going to change certain jobs. I'll give an example of how technology has done that in the past. There was a point of time when for banking, the biggest expense used to be the front end, the branches. Every bank was trying to have more branches because you needed to be there where your customers were and you needed to show your face. And people used to queue up in branches and then do their transactions. That was the only way technology over the last few years obviously has changed that, where now it is digital banking first. And then most banks are shutting down their branches. Has that actually led to cost of people reduction? Hasn't necessarily. Cost in the sense, yes, you are spending money elsewhere. The front end teams and banks have reduced, but the back end teams and banks now have larger O&T departments because technology is very important. Operations needs to support whatever technology is doing in the back end stuff than what the front end teams used to be. And at one point, front end used to be the most. So there's a change in the way the bank operates. There's a change in the way technology has shaped jobs in that sector. And I think going forward in the future as well, that is going to keep happening. Again, AI is a very broad term. It's now more talking about generative AI. AI has been in existence for a while. We've all used, even when we play video games, if you remember, you play versus AI, right?
Yeah.
So it may not be generative AI, so it doesn't have these very cool new ideas that will suddenly shock. It is following a set of instructions and it is doing the best out of those set of instructions in a what. You remember the famous Gary Kasparov versus the AI computers trying to beat because they think that far ahead in terms of number of moves. Deep Blue, right?
India.
So, I mean, that was the idea. AI has been around since the 1980s. That is when we were seeing it. The applications are starting to change. So, to your point on the risk aspect of it as well, we'll see AI create both good and bad. My worry is more on the part that banks have a longer life cycle of ingesting change and understanding what the threats are and then reacting to it. In the interim, it's going to give an opportunity to some startups who will focus on this risk space, who will create something that can help defend. There are already technology companies like, let's say, CrowdStrike, who are doing a lot of stuff in terms of preventing attacks coming in. But AI, as it gets more sophisticated, will be able to represent certain aspects that today's technology deems as human. So when we are checking if you are a human during capture, it's seeing a lot of things and saying, okay, how did the mouse, what are the, what was the previous behavior before they came on this? Those things could get replicated better by AI than technology does today, than whatever automated process that put in place does today. How do banks get more efficient in their detection techniques as well? How do they leverage AI? That will be an interesting thing to see.
Got it. Thanks, Ishan. I think that's a pretty comprehensive view on the landscape with respect to how AI is potentially going to shape the banking industry. One thing that you mentioned, and that was a very interesting example about the capture, the scams that are happening in the world right now, whether it is phishing, OTP scam, people impersonating authorities, duping you out of your money. There is some sort of a fear that the use of AI is going to potentially turbocharge some of these bad actors and scamsters as well. Identify potential risks and how do we design mitigation strategies around it. How you see this sort of risk aspect of AI evolving when it comes to financial and banking related frauds?
It will depend on how people start using AI and how bad actors start using AI for banks to then respond, which is where distributor is have the most effective authentication methods that you could potentially use. And yeah, then hope for the best.
Hope for the best. I think mantra for life. Cool. In that spirit, let's hope for the best and assume like a more optimistic and a more rosy picture of AI. And I guess my next question to all of you would be, how do you expect AI to play a role in the space of personal finance management, investments, and enabling people such as ourselves to reach their financial goals, financial independence goals in a better, more efficient, probably a faster way? Do you see on the AI landscape developments that might enable this type of a future for people like ourselves? Madesh, do you want to share your thoughts first?
Yeah. I think AI can play a really positive role in terms of investments. Like I'll just talk only about personal finance. I don't want to come up with a LLM model or something which will mimic my actions based on my knowledge source, but I would rather use AI as something like an antithesis of what I'm trying to do. Let's say, like with all the knowledge that I've acquired, I come up with a couple of stocks that I want to invest in, but I can really use a AI model which is trained on a different knowledge source, which can help me identify opportunities that are different to these or like support my thesis from a different approach. So I think there are a lot of companies that are actually trying to do that. So that is one big advantage that I see how we can utilize AI. The other approach is basically there's like robotic investing, which has been there for like close to 5 years now, which automates probably the bottom level of investing for most of the people or like really basic people. So I think that's going to like reduce the cost, the upfront cost or the over for people in terms of investing. And I see like these two are the biggest disruptions that I can.
Yeah. Yeah. Actually, pretty much what Rich said with the use of machine learning models on investment strategies has been done for a very long time. That that will continue and increase. In the immediate future, I think what will happen is we'll get a lot of assistance tools on investing and managing finance. So things like very small example is Microsoft has come up with Copilot for Excel for managing your financial spreadsheets. That's a good example. You will have a lot of these company reports being summarized very quickly using LLM. So that that again is assisting. Things like these, there will be tools built to assist you to invest faster, more comprehensively initially. And then as the technology improves, then we'll have more sophisticated ones where, as Madhuri said again, we could have, we could feed it all the trades that we've done in the last 5 years, let's say, and our perspective on those trades. Let's say we start from today and 5 years from now, we keep collecting that data. Maybe after 5 years, we'll have bots that could replicate what we are doing and probably do better in making financial decisions. I think would be the impact on personal finance management using artificial intelligence.
I think there is one risk to this idea of LLMs kind of doing insights and what where investing. There's an interesting concept. You get more returns the more information you have compared to the other side, which back in the 60s and the 70s used to be if you knew companies with what coming, even a few minutes of advance notice, that could be enough for you to make a much larger return than someone else. More recently, I think data has become more widely available, and that's kind of taken away some of that competitive advantage. But it's also, for a while at least, still again, we have disruptive companies coming through. Creates a pattern of everyone is putting money into the same. If you have AI kind of doing this for you. And I mean, all of us, let's say, as in financial, let's say it's the Copilot or a chat uh, for investments that come up. And we are all asking the same questions or similar questions, asking it to give us companies that invest in us or credit. All of us will get the same company invested. That data won't change because the data is the same based on the company, right? It's based on you or me. Could slightly vary based on risk appetite, we based on our the criteria of what companies we're looking. But eventually it's going to start recommending the same thing to everyone. Imagine it's the same financial advisor or to all of the world. And then all of the world starts investing in the same companies, you're kind of reducing potential for what does the top market. Because there is no creative thought or there is no special knowledge or competitive advantage that you have versus the others if you're purely dependent on AI. That is definitely a thing which it's basically creating that or reducing that information gap even further, which could be a slight problem with seeing sort of that. I think Michael Burry
Oh,
sorry.
sorry, I had to interrupt you. Right.
Yeah.
But we are not considering the aspect of individuals fine-tuning their own models based on their strategies, their perspectives. It's fine-tuning is one is training it on past data, but one is also giving it specific instructions based on their risk appetite, mindset, all of those things. So there will still be enough uniqueness in these models to not ending up in the same cluster. But yeah, sorry, keep going.
Actually,
Yeah. Okay,
I also have one to make. Sorry to interrupt. I disagree with actually Isham's proposition from 2 points. One, we all overestimate how much we can predict human behavior. And if we can predict human behavior, I would say that the kind of information that we have access now is exponentially higher than what someone had in 1970. So a person sitting back in 1970 having the same discussion would have said that by 2020, if you have all this information, then stock markets wouldn't exist. That's not the case. So we are overestimating how much we can predict human behavior. The second point is that having a lot of data is not going to make things easier to predict. The best example there is like the weather prediction. Of course, we are better at predicting weather than what it was in 1970. Now, of course, I'm sure we are using a lot of AI and stuff to predict weather, but still not accurate enough, right? So I would say strongly that these two things, which might make the world go as it is, but there are going to be aspects which are going to change. But I disagree that an AI model would disrupt the overall investing space.
See, I agree with what you're saying. The difference that I'm trying to portray is because you also brought up in your previous answer the idea of automated investment advice, right? Or robo advisories that exist today also. Let's say they get better. You can go through any company's financial reports and get whatever metrics you need, right? It's the ability to comprehend all of that data and come up with insights, which a standard model or a standard robo advisor, these advisors are going to be, I'm guessing, more widespread than they are today because companies are going to come ahead and say that our LLM model is the best. You will start working with it. I'll take an example in the US. Let's say Robinhood, which is a free to trade platform in the US. It's very popular with the current generation. It's expanded like crazy. Let's say they come up with an advisory model as well. A lot of people start looking at our advisory model and outsourcing the decision making to it, believing that it can interpret data better than we can. Data is available to all of us. I agree with it. Some people will come up with creative ways of using that data. And that creativity is what differentiates us from, let's say, a model that's following a set of instructions or is still, even if it's generative to an extent, it is still based on past behaviors. Right? So there will definitely be some sanitization. There will be some creative folks who will be able to. My point is overall, if a large percentage of the market is just doing कि हम सब वही कर रहे हैं, then it kind of lowers the overall return that you can expect. On your second point, I agree. Point in time predictions are very important, right? So let's say if I was asking an AI model to me to invest in a semiconductor company, and it told me NVIDIA. Told me NVIDIA last year in October would have been a very different return if it told me NVIDIA last week. And NVIDIA might still be a buy for the next 2 years. But my point is, depending on point in time, if it was last year, I might have had a 5x, 6x return. If it told me last week, I'm already down based on what I would have bought last week. So, I mean, all these things eventually will take place over a matter of time. It won't be returns that you get over a few days. Weather patterns also, there's a better understanding of patterns over a period of time, over months than days. Point in time might be, you might have, variations, but I still feel like there is a risk, and a risk that we should at least be aware of. I was, before you guys came in, I was just going to quote something Michael Burry had. He was very scared when he was shorting the US market. For anyone who doesn't know, Michael Burry is one of these investors who was aware that 2008 was going to happen based on fundamental principles that he was researching. So he was very worried for the last few years that there is a lot of blind index fund investment that is happening. People have no understanding of the market, and there is too much money that has flooded into the market to index funds. That is not really investing based on any kind of understanding or any kind of research. Purely, I am trust the index, which again most of us also agree on, and most of us recommend as well. But his worry was that could create this effect where there is too much money parked in the index, and that can have its own issues for the overall return from the market. So he has a better understanding of why he was upset about that than I. But my point is, anytime it becomes a blind movement toward one thing, there can be a unforeseen consequences. And here I can at least see some things that might happen where everyone predicting the same thing. I'll give you one more example of where the AI is right now. Sorry, I had gone into ChatGPT when it was in its initial beta. And I had asked it a question to generate a list of stocks through a certain filter criteria that I gave it. And I can tell you that it gave me a whole list of stocks that did not satisfy the criteria. Because at that moment, my guess is ChatGPT does not have backend access to any kind of financial rails where it could pull the data from. It was trying to use Yahoo Finance, or it was trying to use some other source, but it wasn't able to read it as well as a human being can scan on a page.
So I think very interesting and sort of contradicting thoughts here. I feel like my views are that what Madhvesh said, it's very hard for any AI to guide or direct human behavior. So you can have all the information in the world, but information, timing, and your ability to control your behavior is ultimately what defines success versus failure. Like Warren Buffett is Warren Buffett because he has the ability to hold on to a stock for the rest of his life, which a lot of us lesser mortals probably don't. I will, of course, personally be very keen to explore these applications and how they develop. But thank you so much, everyone, for your time today. I think very rich conversation. There are so many things happening. It's very hard to sort of stay up to date. Actually, on that note, like Siddharth, I know you follow AI news pretty closely. Maybe for our listeners, you want to quote a couple of good sources of information where they can keep up to date with the latest developments, and then we can close it out.
So there's tons of channels that give good AI information. I'll tell you what I use. So I follow, if you don't have time and you just want to know the latest tools, look at shorts from 100x engineers. If you want to understand the more cutting edge research, look at research papers. There are two channels that I follow. One is 2-minute papers. It's by a professor in the US. So he discusses research papers. And then there is one channel from a guy called Wes Roth. He goes deeper into the science of the latest news in AI. If you just want to know tools and if nothing else, just know the latest tools for different purposes, follow this guy called Matt Wolf. At least I follow him. He summarizes almost every week. He has a list of tools, new tools that come out that he discusses. Yeah, these are some, all of them are YouTube channels.
Awesome. Cool. Thank you everyone for joining us today. And we will be back soon with another exciting episode. Stay tuned and thanks so much for listening.